You ever look at a financial chart and just see a mess of green and red bars? It just feels like total noise, right? But what if I told you it's not noise at all? It's actually a language that's telling a story about the constant battle between buyers and sellers. So the big question is, what are these charts actually saying? Well, they're communicating everything: fear, greed, indecision, and pure confidence, all happening in real time, moment by moment. See, it is a language, and today we're going to learn how to read it. By the time we're done here, you'll be able to look at a chart, decode these patterns, and actually understand the story the market is trying to tell you. All right, let's get right into it. Okay, so with any language, you can't start reading sentences until you know the alphabet, right? Well, in the market, the alphabet is the candlestick. So let's start there and break down its anatomy. So what exactly is a candlestick? It's this simple visual, but man, it packs a ton of information. For any time period you choose, whether it's a minute, a day, or a week, it shows you 4 super important things: the open, which is where the price started; the high, the absolute peak it hit; the low, the bottom it touched; and the close, where the price finally settled. And this really gets to the heart of it, the core battle. If you see a green candle, that's bullish. It means the price closed higher than where it started. Simple as that. The buyers were in control, they were pushing that price up. Now, a red candle, that's bearish, and it's the total opposite. The price closed lower than it opened. That means the sellers took over. The color literally tells you who won the fight during that period. All right, so we've got the alphabet down. Now we can start forming our first words. And these simple reversal patterns, they're like the first words you learn in this new market language. And they're super important because they often signal that a change in direction is coming. Let's kick things off with one of the most important signals out there, the Doji. The best way to think about this one, it's like the market is just pausing, taking a deep breath. It's a sign of pure, total indecision. You'll know a Doji when you see it, because its open and close prices are basically identical. That's what creates that super thin, tiny body. It's the perfect picture of a standoff, a brutal tug-of-war between buyers and sellers that ended in a complete draw. Now, when you see this, especially after a really strong trend, that is a huge warning sign. It's the market telling you that a reversal could be right around the corner. Okay, next up, we have the hammer. This one's a classic bullish reversal pattern. You're usually going to find it at the bottom of a downtrend, and honestly, it looks exactly like what it's called: a small body up top with this long wick hanging down below. And this quote just nails the story of the hammer. Imagine this. During that candle's life, sellers tried with all their might to push the price way, way down. That's what creates that long, lower wick. But then, out of nowhere, the buyers stepped in with incredible force and literally hammered the price all the way back up to close near where it started. It's a crystal clear sign that the bulls are starting to fight back hard. Now, on the flip side, you've got the shooting star. You can think of it as the hammer's bearish twin. You'll spot this one at the top of an uptrend. Here, the story is reversed. Buyers pushed the price way up, but then the sellers came in and just shot it right back down, leaving that long wick sticking out the top. It's a huge signal that sellers are taking control and that nice uptrend might be coming to an end. All right, next up, the engulfing patterns. Now, these are really powerful 2-candle signals. A bullish engulfing pattern is when you see a big green candle completely swallow, or engulf, the body of the little red candle right before it. And, you guessed it, the bearish engulfing is the exact opposite. It's such a dramatic signal. It's basically the market screaming that momentum has just forcefully shifted. Okay, so we've learned the alphabet. We've learned some words. Now it's time to start reading full sentences, even complete narratives. These next patterns are more powerful because they're made of multiple candles, and they tell a whole story about the market's changing mood. And that brings us to a couple of the majors, the morning and evening star patterns. These are 3-candle patterns, and they're considered to be really reliable. What's cool about them is they don't just signal a change, they tell you the story of how that change is happening. This breaks down the morning star perfectly. It's like a 3-act play. Act 1, you get a long red candle. Sellers are clearly in charge, no question. Act 2, a small star candle shows up. That's the indecision, right? The trend is running out of gas. And then for the grand finale in Act 3, a big, long green candle appears. The buyers have stormed the stage and taken complete control. The evening star, by the way, tells the exact same story, just in reverse, at the top of an uptrend. Okay, look, knowing all these patterns is fantastic, it's great, but it's only half the battle. Now, we need to shift from just knowing this stuff to having a real, practical action plan. The real question is, how do we actually use this to our advantage? And this right here is probably the most important point of all. It's not about what you see, it's about how you react to what you see. I mean, anybody can spot a hammer pattern after a while, but knowing when to act on it and how, well, that's what separates the pros from the amateurs.
So here's a simple but super effective 3-step framework. First step, identify context. Is that hammer showing up at a key support level, or is it just kind of floating in the middle of nowhere? Context is everything. Step 2, wait for confirmation. Seriously, don't jump the gun. Wait to see if the next candle actually starts moving in the direction the pattern suggested. And finally, step 3, and this is non-negotiable, control your risk. Always, always place a stop loss. That's your safety net. It protects you if the pattern, doesn't work out.
All right, let's talk reality for a second. No pattern works 100% of the time. It just doesn't happen. As you can see from these numbers, which are just approximate, some patterns are way more reliable than others. A morning star, for example, is usually a much stronger signal than just a single doji. You have to remember, this is a game of probabilities, not certainties. So what's the real secret to all this? It's pretty simple, actually. It's understanding that patterns are just about stacking the odds in your favor. That's it. And remember what we said about context? Where the pattern shows up is often more important than the pattern itself. But the real edge, the thing that will make or break you in the long run, it's your discipline and your risk management. That's the whole game. So there you have it. We've learned the alphabet, the words, even a little bit of the grammar of the market's language. The charts, they're always talking. They are constantly telling stories of opportunity and risk. So the only question left for you is, are you prepared to listen?